Crude is getting ahead of itself and may need to pause soon, but it is for sure boosting confidence. Colin Cieszynski, CMC Markets. So Colin, it's been a very big week. The Fed's dovishness seems to be helpful in many ways, but some say the US dollar is the single biggest issue for risk at the moment. Do you agree?
It certainly has become an area of high volatility. The US dollar had a huge run between the fall of 2014 and the fall of 2015. In the last 4 to 6 months, it's kind of leveled off, and now it's starting to go back down the other way. And this is significant because a lot of currencies had declined while the U.S. dollar had advanced, and now we're seeing that reverse. For U.S. companies, this has actually takes some of the pressure off them because the Americans had been struggling with their exports. They had been struggling with corporate earnings, with overseas earnings coming back at a lower level. So this can help to improve the environment for U.S. corporate earnings. However, for other countries that were banking on their currencies being devalued relative to the U.S. dollar, they may start to not be able to reap as much of the benefits.
Another phenomena, perhaps, is JGBs, which are hitting records as investors seemingly cannot get enough of negative yields, and the strong yen is driving down Japanese stock. What is going on here, Colin? Is this a sign that Abenomics has failed?
I think with the case of Japan, that they've got a lot of structural problems, particularly their demographic issues and their falling population. And at the end of the day, there's only so much that monetary authorities can do, and perhaps even that the federal government can do to offset this. They can't really stop it unless they open the country up to immigration. So really, the best they can do is kind of manage the decline. And yet at the same time, because it's a very stable and steady economy, when you do get flights to safety, that tends to drive up the yen, and of course that impacts their stocks because they're primarily exporters. So they get buffeted as well from international developments as well as their own internal issues.
Russia's central bank kept rates unchanged at 11%. Oil climbed and the ruble rallied, but the statement was perhaps more hawkish than expected. We also had news this morning that Putin will create a homegrown ratings agency. What do you make of these latest moves?
Well, there's certainly quite a bit happening in Russia today, and we have seen the ruble outpacing other oil currencies such as the Canadian dollar and the Norwegian krona to the upside. And I think them holding the line on interest rates is part of that, particularly after Norges Bank actually cut interest rates earlier this week to try and boost their own local economy. In terms of the homegrown rating agency, I struggle with how much credibility in general rating agencies have had since the last financial crisis. But I think the idea of Russia having their own homegrown agency will actually help them in terms of that it should help them to be able to prioritize on bonds and to help to build up their own internal bond market, and not just for the country, but also certainly for regions and corporations as well, and move them along from towards being a more developed market financially. So in that sense, I see that as a good thing.
In terms of other landmarks of the week, crude had cleared the $40 a barrel mark. Do you see this lasting over the coming sessions, and what else should we look out for next week?
The crude oil has had a really nice run here. It is getting a little bit ahead of itself, and I do think it's going to need to pause it sometime soon because it is getting a bit overbought technically. But that being said, overall the underlying trend has been very strong, quite positive. It's helping to boost confidence across a number of markets. Back in January and early February, crashing crude was one of the things that had weighed on sentiment, and now it's helping to turn things around. So not just with oil stocks, but with stocks in general. So that overall is positive, and I think that even though we may see crude oil have to pause or consolidate at some point in the near term, it can continue to recover as we're seeing U.S. Oil production starting to come back down, the oversupply in the U.S. market easing a little bit, and also the continuing talks about producers trying to cap production and stabilizing the market, considering that it's not that long ago that we've had major producers fighting proxy wars against each other, fighting economic wars against each other, even if some of that subsides and they can at least come to some sort of a stalemate, can help the crude oil market.
Colin, great to speak with you. Thank you. Well, viewers, that's all from me for now. Also today we have Press Review, Community Stars, and a LATAM themed forecast. So don't go anywhere. Bye for now.